If you have an LLC or if you plan on starting a business, there's 5 bank accounts that if you set this up properly, it's going to give you peace of mind because you know exactly where your money is at any given moment. It's going to help increase your revenue, and it's also going to make you a smarter business owner along the way. In fact, this is the exact strategy that I used for my business when we were first getting it to its first $1 million in revenue. And so the way that this works, and by the way, you can use this whether you have a regular bank, traditional financial institution, or if you are using a credit union, is you're going to have your main bank account. So I don't want you to think of this as you setting up, because it's usually a question that people have. Hey, is it 5 different bank accounts? Is it 5 different banks? It's going to be one main bank. Again, it can be your credit union or your main bank. First account that I opened was the business revenue account, which was right here. This was the business revenue account. This is where all the funds from the business went into, whether it was $100 coming in, whether it was $1,000 coming in, whether it was $20,000 coming in. Every single dollar that came into the business through the merchant that we set up flowed right into the revenue account. So at any given moment, I can look at the account, top line revenue, gross. Hey, this is how much the business made this week, or at least brought in. This is how much the business brought in this month, this hour. And so I was never lost with where the money was. The second account that I set up was the experimental account, which is the EXP. But I also want to take it a step further because it can be an experimental account slash reinvesting account, which is right here. Probably should have drawn bigger boxes, but we're going to roll with it. So in the experimental and the reinvesting account, especially if you're just starting out, or especially if you're under $1 million, there's only so many places that you can reallocate the funds, especially if your goal is to grow the business. Now, I'll give you some practical steps of what I took with some of the money that was coming in from the revenue account that we, again, had it automated to go into the reinvesting account. I was reinvesting back into my skills. So I wanted to get better at marketing. So I ended up buying a couple of marketing courses. I wanted to get better at growing our YouTube channel so that we can drive more traffic to our site. I reinvested into camera equipment, kind of like what you're seeing right now. I reinvested into coaching. But then I also wanted to take bigger swings, meaning if there was maybe a different marketing campaign that I wanted to run from the ads that we were from the ads that we were running, and there's hey, I want to take a bigger swing at this. I don't just want to target maybe this demographic. I would consider that part of my reinvesting slash experimental account as well. I don't actually consider that just a full-blown expense. Reason for that is because I would set aside a specific amount of funds. And again, this is going to be case by case depending on how you want to do it. But I would set aside a budget that would allow me to experiment, so that way I didn't see it like a loss. I was paying for education. I wanted to invest not just in the coaching, but also wanted to invest in the lessons that I would get in real time. Whatever that is for you, figure out what that is, and then set aside a certain amount of funds so that you can take those risks. Next account, because we're not going to avoid it, was the tax account. Now, this will definitely vary depending on how you're set up. So if you're just an LLC, or if you are an LLC, but you are electing to be taxed as an S corp, that tax liability is going to be totally different for everyone. I'll give you what my CPA told me at the time, just to be safe. And again, it could be more, it could be less, but he said anywhere between 20 to 30% set aside anytime funds came in. And so if we had $100,000 that came into the account that month, automatically right around $20,000 to $25,000 would be sent to the tax account. This right here, you can take it to your CPA. You can talk to them to see, hey, what expenses can I write off? What deductions can I take? I'll leave that between you, God, and your CPA. But one least thing that I have to worry about, which is why let me just automate it. And I'll be pleasantly surprised if you're paying your taxes every quarter, and then it turns out that your CPA or your accountant tells you, hey, we don't actually need to send all these funds. You're good. We were able to find another tax deduction somewhere. Then you're good. Now, I've added a little bonus on here. If there is, and this is a bit more for my high level entrepreneurs, if there is maybe a piece of real estate or if there is maybe a vehicle that's obviously within the tax code that you can buy that would allow you to offset your taxes, then if the funds are in here and your CPA says, hey, actually, we're probably going to get your tax bill down to maybe only paying 10%, there's like 10% left over. Do you just want to buy some real estate with it, or do you want to buy a vehicle with it that you need for your business anyways? I'm going to dig into this tax account because it's already sitting in here. Something to consider. Doesn't always work out that way, but I at least want you to think of how we're setting it up so that, again, you can sleep better and I having peace of mind knowing that you know exactly where your money is parked at any given moment. The next account that I set up was my profit account. Now, this can vary depending on how profitable your business is. Some businesses are running at a 20% margin, some are running at a 50%, some are running closer to 70, some are running at a 5, depending on your industry. And so you're going to want to do your due diligence for your own business and run some back of the napkin math as to what that profit is. This profit account is what you're going to use to pay yourself through. Now, again, this is the way that I set it up. Your CPA can give you some different advice. This has worked for me. I would pay myself through that profit account into my account. And so if you have an LLC, that's how you would set it up. If you have an S corp, then obviously there's distributions in play, and you'd want to obviously make sure that you are actually putting yourself properly through that so that you don't get audited. But I would take it from the profit account. A lot of entrepreneurs make the big mistake and they take it from the revenue account. I don't like doing it that way, just because you can get blindsided if you're not careful and you can see some extra funds in there and you're like, oh, I have an extra $20,000 in here, but it's not really $20,000 because we either haven't set money aside for taxes, or we forgot about the final account, which is the op. So the operational account, you can also see this as the expense account. This is the account that you're going to use for every bill and every expense that you have in your business just to keep the lights on. It can be possibly it can be your payroll, although I would argue that you can maybe separate that into a separate account, but it can be your payroll. It could be your brick and mortar if you have a lease that you're paying every month, the utility, the internet bill, if you have vehicles inside of your business, you can run that through your ops if that's what it takes to keep your business afloat. The reason why I say that is because if I am using the operational account, I only want to make sure that it's the exact funds needed to keep the business alive. None of this extra stuff, especially if you're running lean, working your way into that first $1 million mark. I mean, could you use this outside of $1 million? 100%. But I think that this is a good framework to use, being that it's one that I used through our first $1 million. Heck, I've seen entrepreneurs that I've personally spoken to use this upwards of $5 million. Again, could you add some more accounts on here? I just don't believe in overcomplicating this thing. I think that having a 5 is a nice sweet spot because you have departments for each and every single part of the business that's going to demand that you put funds into. So this way, you're not just looking at this big number right here saying, oh, that's what's left over. Let me go splurge, because that's what gets business owners in trouble. And so if you found value in this content, consider sharing it with an entrepreneur. Put it to use. Come back to this video, report back, let me know, hey, man, I put it to use. It's actually been helping me stay more focused in my business and do what I do best. But other than that, appreciate you guys checking this out. Until next time, everyone, I will see you in the next video. Bye.